Why I bought a $70,000 truck. I bought a $70,000 truck late last year to save more than $21,000 on my taxes. I did this legally through what's known as the 179 rule. Essentially, the $70,000 counted as a legitimate business expense and lowered my business's taxable income by $70,000. This allowed me to save about $21,000 on my taxes through purchasing a qualified vehicle, and now allows me to write off all of my gas, which is about $70 a week, plus my insurance, which is like $350 a month, plus all of the maintenance and all of the upgrades. So in total, I saved about $30,000 on my tax bill last year by purchasing a brand new $70,000 truck. Now, to qualify for Section 179 of the IRS tax code, you need to purchase a vehicle through your business that weighs over 6,000 pounds to count as a company vehicle. This is known as the GVWR. Last year was the last year to claim the full 100% depreciation on the vehicle purchase. Starting this year in 2023, you can only claim up to 80% depreciation on your tax bill in the year that you bought it. It will continue to shrink by another 20% per year until this tax hack no longer exists. So in the year 2023, if you buy a qualifying vehicle for your company, you can still deduct 80% from the purchase price from your tax bill the year you bought it. If you'd like to learn even more tax hacks and how to trade stocks and options, you should consider joining my academy, where I can show you exactly how I turned 5K into over 100K trading penny stocks. And I will even text you several trade ideas every single day straight to your phone. You can learn more with the link in my profile.
Okay, so let's talk about Section 179 and how it applies to vehicles for business use. So the very first thing that I always stress to anyone who's going to go get a vehicle, number one, is you have to document and track your miles. I would recommend downloading some type of app like Mile IQ or maybe even TripLog to help document those miles, because it's one thing to go and buy a vehicle and say that you use it 100% of the time for business use. But in reality, if you're ever under audit for something like a vehicle deductions are one of the most scrutinized items under audit. So if you're going to actually be claiming vehicle deductions, you want to make sure you have the documentation to support it. So just because you go and you buy a vehicle and you spend however much money on gas and expenses and different insurance, the only thing that really matters is your business use percentage, and you have to prove that by tracking your miles. So that's the biggest thing that whenever it comes to vehicles. The second thing is, even though it's a great way to go ahead and get a deduction is buying a heavier vehicle, sometimes it's not always necessary. Don't forget, if you go and you buy a $70,000 vehicle, yeah, you may be able to save $20,000 or whatever you said, $30,000 in taxes, but you still have to actually pay the bill on that. Don't just go and buy a vehicle for the tax deductions. Buy a vehicle because your business actually needs a vehicle to become more operationally efficient. Because if you do go and you buy a $70,000 vehicle, and let's just say you use it 100% of the time for business use, and you actually track the miles, he may have saved $20,000 or however much he said in this example, but don't forget, he still has to actually pay the car note. That bill is due every single month, and the full $70,000 is still due on that vehicle. So it is still a big financial decision to be making. So again, always consider all the facts and circumstances related to your situation. Yeah, you can get a really nice tax deduction, but there have been plenty of times I've seen people go and get these vehicles. They do 100% bonus depreciation or whatever type of accelerated depreciation strategies to really save on taxes in that year. But then a few years later, they don't want the vehicle anymore. They want to sell it off, and guess what? Now they have depreciation recapture, and it's just a complete big financial mess for them.